Good morning. Welcome everybody to today's stream. It's Monday. I'm feeling very relaxed this morning. How's everyone doing today? Who do we have in the chat? We got Jambi in here. First. Jambi is the first one. Miko Kostov, welcome. Robot. You got to be quicker than that, Robot. A lot more crypto. Good morning. BTC Champ. Good morning. Anthony Notorious POP. Good morning. Robot, you're new. Are you really? A new and improved robot. Nuno Ferreira. Good morning. All right. How's everyone's weekend been? Mernin Heisenberg. Mernin. Heisenberg. I had a friend stay over at the weekend, and did this thing like we were like. Had no idea. We were just having a weekend. No, it was last week actually. Yeah, it was last week. And I was flicking through, and we were like, don't know what to watch, because we were just like having a chill night. And then I was like, have you ever seen Breaking Bad? And they were like, no. And I was like, you should watch it. So then we watched it. So I rewatched the first episode of Breaking Bad the other day. That's like the best show ever. But I'm not someone that rewatches stuff like ever. But I might rewatch it because it's very good. Anyway, yeah, I'm talking nonsense. AZTV, good morning to the BTC Bullas only. Yeah, I mean, Bullas and Bearas both have good mornings right now because we've had a decent bounce, but we've also got some bearer stuff. And I'm quite glad of this little drop we had over the weekend. Enabled me to exit one of the short positions that I did not time the best. So I managed to get out of that nice, or well, not so nice short position. You haven't lost your Breaking Bad V card yet? Oh gosh, you got to do it sometime. It is the greatest TV show of all time. Anthony had a good weekend as well. Yeah, it is boiling here in the UK. It's so nice right now. It's so nice here in England for a change. I know there's all this bad news going on about like, oh, the UK, there's all these riots. Nah, there's not. Not where we are. It's lovely. It's lovely here at the moment. Making the most of my last month in this country before I disappear forever. Better Call Saul was a great spin-off. It really was. Okay, well, yeah, I mean, I'm probably going to keep this stream pretty short, pretty sweet. I'm going to go and sunbathe and look at the charts and work on some other stuff. Work on some more of this course content for you guys a little bit later on today. But yeah, we'll keep it fairly short. We'll do the Bitcoin update as usual. Have a little look at Ethereum maybe. Ethereum's not really done very much. Story of the whole cycle, I guess. And yeah, altcoins. We're getting some little movements on altcoins. I took a couple of alt trades on Friday. They're actually short positions that I took. And yeah, maybe we'll cover those. I went short on TON, and I went short on something else. I don't have them anymore. But I was just playing around with a couple of little trades on Friday. But we'll start off here with Bitcoin because there's a bit of an update that we can do. We'll pause the music. We'll get it out of the way early. And then we shall continue with other stuff. Sound good? Let's go music off. Chart looks very interesting on BTC. It does. It does. So. Alright. We're going to do this. I'm going to actually change this up so we can do the initial 365. There we go. I'm going to keep it super simple. Just cover the important stuff. And we'll do that. If you're here as well, please make sure you hit the like button. I see there are about 50 people here. Still very quiet. Summitings. Bearish, well, not bearish consolidation, but downtrendy, rangy, slow market things. So if you are here, please do hit the like button. And that means that it helps the algorithm out a little bit, doesn't it? Which is good. Right, okay, let's go with the BTC stuff. And once I've had a drink of water, so like all over the place. Lovely. Record. Date 12. Hello traders, welcome to today's Bitcoin update. It's Monday the 12th of August 2024, and yeah, Bitcoin has had a little bit of a pullback over the past couple of days after the real nice bounce that we saw on Thursday. I said Friday a minute ago, but it was Thursday. So yeah, decent little consolidation going on here, decent little drop down that we've had over the weekend. And we're going to cover all the important stuff that you want to be looking at. So to begin here, of course, we know for a start that Bitcoin did get that bounce from the yearly, well, the 365-day rolling VWAP and the 365-day EMA. So these are quite significant moving averages, and the VWAP, of course, being the volume-based one, that did give a strong reaction from Bitcoin a couple of weeks ago. Now, what we also had there was this gap on the weekly time frame. Okay, of course, we came through and we filled the entirety of this impulse candle that was from back in February. That's a long time ago now. That's absolutely crazy that we're still in the same range as we were in February. But yeah, we filled that big impulse candle that took us up above the 69K to new all-time highs. And we came down, took the liquidity beneath that, and also came back to test the ETF day launch highs. So for the highs that we had on that first day of the ETF launch, all the way even further back at the beginning of January. So basically a complete round trip of the really important price action that we've had so far this year. Now, when we had that day, that really bad down day that wrecked a lot of people, there were two things that I really wanted to see as a sign of strength from the market, just to confirm that we're not really looking at this being like mad, like lower, significantly lower price action. Now, the first thing I wanted to see from that was the daily close back within the range, which is what we had. And then second to that, I wanted to see a weekly close back within the range. And we actually had a really nice weekly candle here. Of course, we did go all the way up to essentially fill the gap down that we'd made. Okay, so of course, with last week's candle, we did have this big gap between up here at 63,500. And then, of course, the previous week was ending down there at like 57K. Now that reached all the way back up to the top there, and now we're just left with this little zone here, okay, a few $100 zone that price could come back into and refill. That's the only real like weekly imbalance that we have left on the chart that is above us. From a monthly perspective, okay, the other thing that I would like to see as we go into the end of the month, of course, we're only about, well, we're not even halfway through it yet, is if we can get a close on the monthly back above 60K, ideally 60,500, that would take us back into the value area low of the range. That would take us back into the value area of the range, sorry. And it would also take us back into this monthly structure that we have, where we have these consistent candle closes that are essentially within that March candle. Okay, we've seen wicks above. Well, we haven't seen wicks above. We've seen wicks below, but always that close back above that $60,500 to $61,000 level, and that also gives us those consistent monthly closes above our previous all-time highs back in 2021. So overall, on the higher time frames, things are still looking good. I do consider this to be one of these broadening wedges, which you would then set a target as almost a measured move to see significantly higher as you go into the rest of the year here. So when you're looking at these measured moves, okay, essentially looking at this as a bit of a bull flag, I consider this cycle to have started in mid-October. So I'm drawing this as a little bull flag. I know it's very, very newbie, but that does give you these targets above 100K, and I'm still very confident that we are going to see those prices above 100K as we go into the end of this year and early into next year. Now, another important thing to note, okay, of course, it hasn't just been smooth sailing like a complete V-shaped recovery higher again here, and we absolutely weren't expecting that. I am still expecting this to be slow and steady until we get into Q4. And that would take us towards the end of September, early October. I think that is when we have the highest probability that things will start picking up once again. Now, if we add back on these moving averages, let me just change these ones up. And we're going to go 200 and we're going to go on to the 50. And you know what we're going to be seeing here was we had the death cross. So this being the first death cross that we'd had since September 2023. So a year ago. Okay, and we had that rally into the death cross on Thursday and that consolidation on Friday before getting a rejection. Now, when you have these moving averages like this, I don't place a huge amount of significance on the death cross thing in the same way as I don't place a huge amount of significance on these patterns like this broadening wedge that we're forming right now. But they do often give you, at the very least, a reaction and a basis for a bias moving forward. So of course we had that confluence there, all right, where we'd had that move up. We came straight into those moving averages. Now, regardless of whether this was a death cross or whether there were just moving averages there, the 50 and the 200 being very important ones that I do look for like overall cycle moves, it's unlikely that you're going to break through, clear those and continue higher on first attempt. So you came back into that 200 moving average, back into that 50 moving average, and have then since seen a rejection from that. Now, what has the rejection done? All right, very, very simple. Okay, we formed a gap on the daily time frame. What have we done this morning and over the weekend? We've come back in to fill that entire gap. Now move it down onto the 4 hour. That was also a really nice clean 4 hour gap. And what do we have there is we have this the 54 hour EMA coming back down. Okay, you had that break through it. You came into that moving average, the 200 on moving average on the 50 up here, rejected from it, now holding this as support. What we also have here, moving down onto those slightly lower time frames, you can see once again, all these moving averages like work really, really quite well together because of course the 200 on the 4 hour is going to be the same as the 50 on the daily. The 200 on the 1 hour is going to be the same as the 50 on the 4 hour. Okay, multiples of 4. And this is now what we're seeing here with this just consolidation and balance around that 200 hourly EMA. Okay, so you come into it, you chop around for a bit, you impulse up, fill a lot of the imbalance from the move down. You have this corrective move, and now it's finding this as support. So what I've done this morning, I did take a short position on Thursday last week. I scaled into that short position. I was underwater for a little bit, but I was confident of a pullback at the very least. And I've just used this as an opportunity to close out of those short positions now. And essentially mean that the longs that I have running from back here, okay, if we had that reaction from the Monday highs last week, and I'd taken profit on those shorts, great. But now I'm just covering myself. Okay, I had a short position that was a little bit under, but now getting the opportunity to get out of those short positions. And I am expecting this to continue higher probably throughout the rest of this week. Now, that doesn't mean I'm expecting moves all the way back up to 69, 70K, for example, but I do believe we can come and test those previous week highs. And I think those are going to be really important levels on the chart here. So if we just turn off these moving averages, okay, we can see the support that it's holding, right? We had that New York open where we had that nice move up on Thursday. That has come back, fully retraced. Order block here, gaps here. consolidated, and I think if we're looking for a trade at this very moment, I would like to see this hold as support, and then we see a move back up to take those previous week highs that are all the way. Well, actually, they're not. Yeah, they are. they are, because we took out the Monday highs to take out those previous week highs at 62,800. Okay, so that's the main plan that I have. Now, if we are to lose the area of support that we have right now, all right, and that would mean, from my perspective, candle closes 4 hour, ideally, maybe even 1 hour candle closes below 57,500, taking you away and like losing the support of this bullish order block that we have down here. Then, all right, we do have an anchored VWAP from these lows that is a little bit lower, but I at that stage would be looking for that deeper retrace, probably around about the golden pocket. I'm not really thinking that we have a high probability of coming down and testing the lows down here, but by all means we could be coming back to test these wicks that we had from back in July. All right, and that would take us into that golden pocket zone. So overall on the chart, it is relatively simple for myself. Looking at those long positions right now, and that's consistent with Ethereum as well here, I believe, and I will cover the Ethereum charts as we finish this Bitcoin chart in the stream, but I do believe we can see a relatively slow and steady move up that takes us up to those previous week highs. Now, if we do lose this level, okay, then we are looking for a deeper retrace down, and that's maybe the time where I would look to hedge hedge those long positions in case of any carnage that we get that comes down and takes these lows. Now, from a news perspective, okay, it is quite a big week for news. We did have a more or less empty week last week. There was nothing really going on, and that was consistent with the actual price action that we had from the Nasdaq. There wasn't a huge amount that happened. It was very, very tight PA, as we can see as we went into the end of the week last week. Not a huge amount going on. Now, this week we do, of course, apologies for the screen going to go super bright right now, but we do have CPI on Wednesday. No, let's start that again. We do have PPI on Tuesday. That will be 1 hour before the New York Open. We do, of course, then have CPI on Wednesday, 1 hour before the New York Open. And then we've got core retail sales and unemployment on Thursday, 1 hour before the New York Open. So these 3 days are going to be significant. We are likely to see volatility on those days. And that's the day where we could be looking for those bigger moves. I think the Monday, it's a bank holiday in Japan. Of course, Japan's been quite a key player within the market recently. All right, the Asia sessions have been fairly volatile. The Japanese market itself has been very volatile. The yen has been very volatile. So a bank holiday there in Japan, which means that that's not going to be affecting the charts so much. But also, yeah, it being a Monday, the news being later on in the week, we would be looking for a relatively slow and steady day, I believe, today. A couple of other things, okay. Of course, UK has been in the news a lot, and we do have some news from the UK. So there's unemployment numbers coming out from the UK. We also have the CPI and the UK GDP that's coming out. So that could cause a little bit more volatility as well there. But mainly, okay, it is the US markets that run the world and that run a lot of the crypto price action. So it is these events, the PPI, CPI, retail sales and unemployment that we're looking at this week. If we have a look over here, the liquidation map's not really going to be telling us a whole lot, and that's kind of out of date anyway. The ETFs, there was a little bit of an outflow day on Friday. Okay, so a small outflow day on Friday after we had a decent inflow day on Thursday because there was a big move up on Thursday. It's relatively flat. Okay, there's not too much to be saying with the ETFs over there. From a order flow perspective, right, it's the same kind of thing that we've been seeing for a while. We can just turn this into a 30-minute time frame, and we're seeing overall, okay, since we've had those lows, it has been the spot bid that's been a little bit stronger than perps here. Perps got wrecked. All right, essentially we had a bit of a bull trap, a lot of a bull trap that was a couple of weeks ago. Then we had, of course, that massive move down, the huge capitulation. And since then, it's been very, very flat on perps. We've had these mini bullish CVD divergences playing out. Spot has been holding up relatively well. But overall, just a very, very calm sideways market here. There's not too much to be saying with the CVD. And of course, I've repeated this for a very long time, but it still is there. We do have a very, very significant spot premium right now. And historically speaking, the longer you have these spot premiums, the bigger the move out of it to the upside is going to be. You're not looking, it doesn't look likely that markets will top on these premiums. Okay, so we're not looking at this as being a big distribution event. I'm still very, very confident that we are in a reaccumulation and we are going to be seeing much higher prices as we go into the end of the year. And the length of time that we've been at this premium, it would suggest to me that we're going to be seeing there's an appetite here for spot to be buying the asset. It's just perpetuals aren't playing catch up, but when they do start to catch up, that's when it can really get that big impulsive move higher. From EXO, the only other thing that I really want to cover here is the move down that we've seen today and over the weekend. All right, we haven't quite got there, but we've come very close to that naked point of control. So we were talking about this at the end of last week, that 57,400, 57,300 area being that POC that we had from Thursday. So Thursday being the big move up that we had last week that came into the death cross. We had this consolidation, a 3-day consolidation. Nice balance was found around that 60K zone. A bit of a move down, okay, opening outside of that previous day value area, outside of that weekend value area. A bit of a move down that comes in to test the high volume areas, the balance area from Thursday, and now we've subsequently seen a bounce. So if this does drop again, this is why I would want to see acceptance below that 57.5, 57.4 in order to confirm more of a bearish bias, because that does bring you into these imbalances, the single prints, and of course then we've got some liquidity, some poor lows down here that could be targeted. But if it does drop and we just tap into that volume point of control, that time point of control from back in Thursday, I think that would be absolutely fine. How that would look on a, always do that. How that would look on a candlestick chart is a little bit like this. You would essentially just come down, get the SFP off of our local lows, all right, that takes you into that point of control, and then you'd want to see a quick reclaim of that and then see higher prices to go and take out those previous week highs over there. So overall, I think that's really everything that I have to say. You can see again on this chart, so we've been looking on the spot chart mainly here, but this has been the recent price action that we've had. All right, we had that move up that took those Monday highs last week. The short position that I took and that I know many others took, this move down has given us the opportunity to get out of that. I'm not expecting a huge amount of profit from this anymore. We have that anchored VWAP holding a support below. We have this volume point of control here within this order block. So if there is to be one more move down, you would look for an SFP off of these Asia lows and then reclaim kind of that weekly level, the weekly open, for example, and then be looking over towards those new highs. If we are going to see closes below there and a rejection, then of course I think that can take us down towards that golden pocket, taking out these poor lows that we have over here, coming into the golden pocket area, and that's where I have alerts down here around about that 53, 52, 500. So yeah, for me, it's pretty straightforward. I've done 17 minutes of just repeating in different ways the same levels, essentially. And yeah, that's more or less what I am looking for. If we are going to see higher prices, we've got to get back above weekly open. It's been incredibly flat. It's been incredibly flat all day. You spike the lows, we've spiked the highs. So this London session has spiked lows and has spiked highs. We're now looking for a little bit of continuation in one direction or another. But we just have to wait and see where that ends up and then take the trades accordingly. So hopefully that's clear for everybody. Please do give the video a like, give it a thumbs up, subscribe if you've not done so already. Check out tauruscrypto.com if you'd like to find out more information about our community. And also, of course, a thank you to our sponsors for these videos. Blofin, a fantastic non-KYC exchange. So if you are looking to trade without the issues of KYC, then Blofin is the recommended exchange that I personally use. They have a really solid API, low fees, and of course they are giving a very juicy deposit bonus at the moment of 10%. And the more volume you trade, the more bonuses you can get. So you can get up to like $50,000 worth of free money just by trading on the exchange. So do check out the link in the description below. You also get a discount on your fees with that link in the description below as well. I'm going to wrap it up here. I'm going to continue on with my stream. I do stream more or less every morning, unless the markets haven't done anything. And I will see you in the next one. Cheers. Bye-bye. Cool. That was pretty simple. If anyone has any questions on that, let me know. And let me get this uploaded. Where's my little screen gone? There it is. %, setup today. Yes. There would be, yeah. I mean, the thing is, like, I think if we are to see a move up, I would be, yeah, because previous day value areas are weekend, all right, I'd be looking at, yeah, we probably quite easily trade through all of that. Let me just get this uploaded and then I'll open up the TPO chart again, and we can go into a little bit more detail there. CME gap, yeah, there will be. Upload video. Where is my little video? Twitter. X. Upload it onto there. Yeah. Cute. Thumbnail. Are you ready for 32K, Mr. Luke? We're not going to 32K. But I said that before, didn't I? About 49K. But I'll get it right on this one. We're not going to 32K. No. It's not happening. $38K at least. No. You got to remember, yes, okay, we did tap below 50K, but there was zero acceptance of price action down there. Zero. The acceptance of price is within the range. This is not a distribution. But I can be wrong. I have been wrong before. Very rarely. But I have been wrong before. Publish. Only wick below, only to grab liquidity. Yeah, precisely. Precisely. It was a the opportunistic use of a bit of a black swan event to push prices lower again. It doesn't actually mean anything in the long run because there was no acceptance and no aggression beyond that. So if we're going to be looking at 32k, you'd have to see aggression below lows, and we've not had that on any of the times that the lows have been taken. So it's just highly unlikely. I mean, I'm not saying it, like, of course anything can happen, but it is highly unlikely that we will be going down that low. Because for that, you will need to see continued aggression below lows. And we haven't seen that at all. Every time it swept the lows, it's retraced higher. And the liquidity is above us. All right, we're very, very, very much lacking any point in going lower. It would be so expensive for for anything to go lower than that, for the market makers, for the exchanges. And it would, I mean, if we go to 32k, it would destroy the industry. So it's, of course anything can happen, but it is highly unlikely. But that doesn't mean it's impossible. All right, let me post these videos up. And yeah, video is done. We can continue on with the stream. Put a little bit of music on back in the background. Beautiful. Right. Yep, so what's going on here? I wanted EXO, not browser. EXO charts. There you go. The 80% setup you mentioned. So I think when you actually, yeah, if we do get acceptance back inside previous day value area, what that would also do is it's a nice composite, right? It's a nice composite of this balanced area. So although we don't have, it is Sunday price action, and I wouldn't be looking at like purely that 80% setup, that rotation between value area to be happening. I do think that if we can gain acceptance, of course there is those single prints here. If there is acceptance back above that 59.4, wasn't it? Then absolutely this can move through back above those 60k areas, and we'd be looking pretty good there. So yeah, absolutely. And then that takes you very close to what we're seeing with these highs that we had from Thursday. Of course, yesterday there was the SFP off of the Friday highs, and then we had the rejection. So that's kind of nice, but it was internal. So we swept the internal liquidity. All right, here. So we had that sweep of the Friday highs. Came into that daily level. All right, so the Friday open. Then a rejection. But yeah, holding support here. Holding that weekly level. All right, previous week open. Consolidating between previous week open and weekly open. Yeah, absolutely. If this starts to climb back up, you're 100% expecting this move down to get retraced, and I would be looking for a move to take out those previous week highs, I would say. Encoder, so I have the same bias. It does look like a very careful accumulation, which allows for it building up as a falling wedge, as not an aggressive absorption pattern. Yeah, so I'm looking at this broadening wedge idea, which is bullish. It's a bullish chart pattern. All right, it would not be bullish if we were doing it the other way around. Okay, the shallow slope is the breakout. So when you have a wedge like this, and I've explained this before, it's the shallow slope that generally gets the break. Okay, anything that's here, because we're not seeing acceptance. There's no acceptance of lower price, no acceptance of lower price, no acceptance of lower price. Okay, we are making lower lows, but the market is using that as an opportunity, in my opinion, to accumulate. It is accumulation. It is bullish. Despite the fact that price is moving down, it is bullish. What you do not want to see is price moving up in a manner like this, okay? This would be bad, and people get the wrong idea consistently. This would be very bad. All right, price comes into it, you come down, you get no acceptance of higher prices, you come all the way back down, and you do that. That is bad things. You do not want to see that kind of thing playing out. And in the same way, you invert that, which is what we're doing now. Okay, and we are seeing something like this. This is incredibly bullish. All right, price has come at it from below. You form a range. Okay, you generate all this liquidity. It is highly unlikely that that is a top. And that's just the probabilities playing out. It's highly unlikely. It is much more likely that it is reaccumulation and you are going to higher prices. And it just does not matter. It is insignificant where these go. Okay, they are just opportunities, and the fact that it goes lower just gives us more opportunity. And all you really have to do, if you're a higher time frame investor, the invalidation for this, and what you would have to see, okay, even if you draw it like this, all right, you've got to see acceptance below. So we can draw it like this. We don't have to be going for this wick. All right, we can go for this one. But what you need to see in order to invalidate this idea and for it to become, even attempt to see 32k, what will happen if we're going to go to 32k? What it's going to be is this, and the only way it can do it is by doing this. It will need to break down, and it will need to stay outside of it, and then that's when you flip your bias. So the thing is, if you've been accumulating here, you will, like, okay, you're going to be able to get a low exit from it around here, but what you're going to see, in the same way as when you flip POCs, they become resistance and then we go lower. What we will see if we are going to get that is the breakdown, back test, and then continuation lower. It is unlikely. It's not impossible, but it is unlikely. What is far more likely, I mean, it could come and spike the lows again. It could come and spike the lows again, okay, but they're just more opportunities. It's not going to reach down as low as 32k if this is the case. And then you just have more profit to be made on the upside. Yep. So it doesn't matter. Spiking the lows is absolutely fine. You just got to not be over leveraged. When these guys go, they will go. And they will go. We could also just take topside liquidity and fail the pattern on retest. Would be opposed to 75k to 32k. Again, I think, I mean, I wouldn't be as confident, but I would be relatively happy to trade continuation on a breakout of these highs. I think it's something that I would do. I would look for breakout of these highs and continuation higher. I would imagine we get a pretty clean break. Now that's kind of 50-50. But the length of consolidation that you've had here, if we're going to those highs and we're taking those highs, I think that's the point in which you start to short squeeze. We're not going to short squeeze when it's down here. It's just not going to happen. All right, the shorts will start to enter when we come up towards these highs again, and those areas are the opportunity to squeeze, in which case we would likely see a very big move higher. Now that doesn't mean we can't come back and test it again later on, or we can't reject later on, but I think when we do get a break of this, it is going to propel it quite a lot higher. Quite a lot higher. We just need to follow the money. Yeah, we do. And for me, been in this market long enough, the flow of the money does look like accumulation to me. It's the same with equities. Yeah. Same with equities. I think we're looking good across the board. Additionally, from a couple of days ago, BlackRock, Fidelity, Grayscale, MicroStrategy have not sold their Bitcoin despite the market crash. Again, that kind of stuff I don't care for. Yeah, I'm not bothered about that. But again, yeah, that is where there's a lot of money. Okay. So you follow the money. Yeah. Anyway, anything else from the technicals that we can look at? Otherwise, I think I probably will just call it there. I've done the Bitcoin update. Ethereum's relatively flat. Okay, with Ethereum, filled the gap on the weekly. All right, again, we spiked lower. Ethereum's just looking a bit like, meh. That could be more distribution-y type of looking, but I quite like where this has come back into. It's holding, taking liquidity below these lows. ETH BTC, again, we have hit that level that we had been talking about within the stream. Okay, that is that 618 golden pocket. That is the anchored VWAP from the from the highs back in 2017. I would imagine. Now, I'm not saying it with as much confidence as Bitcoin, but Ethereum looks like a very good play. And you've had a similar kind of situation. Ethereum with the BTC pair, it is just a weird accumulation. To me, it is a weird accumulation. This is the thing that, this is the distribution, okay? You're making the highs, you have the shallower side here, you break down, you back test, and then you drop lower. But yeah, I'm not going to go too much over Ethereum. Altcoins, are there any altcoins? Just have a look at. I'm not trading them very much. I just take the odd little day trade. I see what's moving on the day, and I see if there's little opportunities there. But for me, it's still the same thing, all right? Protect capital until conditions are better. I think that's all we've really got to do. I'm not going to start chasing all of this, because actually the moves are so slow. Yeah, I'm not going to start chasing any of this stuff. Even the stuff that's up a lot today is not really up a lot, is it? Influences shilling sui. Yeah, that would be a consideration for a short. But it looks pretty strong for now. I wouldn't be chasing shorts on this. I wouldn't be chasing longs on the other stuff. You get a move like that. I mean, this is the kind of thing I look for. Okay, you just get these like impulses that come out of nowhere. Whether that's news based or something like that, you get these impulses. These are the kind of things that, okay, if I see stuff like this happening and you have these big wicks down on high volume, then I think maybe I'll look to scalp something. So maybe I'd look to scalp a long if this comes back down here on Loom. Maybe there's some news surrounding it, but I don't really think it matters. There's not a whole lot of people watching what's going on in the market right now, so news is insignificant. The fact that you've come down, filled this little gap here, you've had a reaction from that, you've done it on high volume, liquidated a bunch of people. I think if there is to be a retest, you've got a nice invalidation. You can look for a scalp on stuff like that. But that really, really is like stuff that's moving like this. I just do not see, I do not see any purpose in chasing. Market looks good this morning though, because a lot of these things, look, this morning you've spiked those weekend lows and you're seeing a recovery. Okay, on a bunch of stuff, spike those weekend lows, seeing a recovery. Sui wants to move up violently. Yeah, I mean, it does look good. It does look good. I wouldn't be shorting it, that's for certain. I wouldn't be shorting it, not yet. Maybe once it gets to that POC. If it gets to that POC, of course, that was a trade that did not work out very well. But again, this could, I mean, yeah, you're looking at this having essentially you've got the opportunity to reclaim some quite significant support here, and then you'd have those same targets, that $1.50 target. So yeah, Sui could quite easily go up here. But then look, the thing is, when you zoom out of this stuff, all right, it's still small. Just wait for the volatility to kick back in, because actually there's not a lot going on. Even the stuff that's moving big, it's not very big when you look at the bigger picture. Yeah. And Sui, in my opinion, is probably going to be one of those that, let's say in 6 months' time, ends up looking like this, and you do a run that looks like this, because that is still going to happen with this market. Yeah, I still think that's going to happen. I still think this has just been this double, like, all right, you have this nice little ICO reversal, and then you have a consolidation, and then you go for the big run. After this hasn't had a market cycle yet. You say, can I have a look at Link? Link's another one of those that I just would not be looking to trade at the moment. But again, yeah, for a buy and hold position, you're so unlikely to get better opportunities than this. So unlikely. But this can stay down here for a while. So you had up here like this head and shoulders, broke down, reached the target for that. All right. Did you come back into what the POC was? Yeah, Link again, if you're looking for a buy and hold, to have an opportunity to have got back into Link below $10 when you've got a lot of upside potential on it, brilliant. Just from the higher time frames. Fantastic. So yeah, don't be scared about this market right now. Don't be fearful of lower prices. The lower prices are unlikely. Acceptance of lower prices is unlikely, in my opinion. Otherwise, the whole of crypto is just dead. So don't be afraid by it. Don't be afraid of the price action we're seeing right now. It is a fantastic opportunity to accumulate stuff. You just got to chill out on the leverage. Use the leverage when the volatility's back. All right. Like I'm so much more likely to be trading Link when it's all the way up here than when it's here. Like a buy and hold, fine. Yeah. But if I'm looking to trade, I need volatility, and we ain't going to get volatility until we see mad markups and big impulses, an actual percentage, like big percentages we can trade. Yeah. So I'll be trading when things are like crazy again. And that's the time. That's the time where you can run accounts up many multiples. And then you just got to make sure you get out like when things turn. But absolutely, like buy and hold, go for it. Go for it. Cool. I'm going to wrap it up here because it gets like speculative if we talk too long. We've covered the technicals. I've uploaded the video. So thank you very much for watching. I'll be back again later. I'm going to go chill out and work on some other content for you guys today. And yeah, I'll see you all again tomorrow. Cheers. Bye-bye.